to give you a bit of context, I know I emailed you. Obviously, I saw you speak to everyone in Project Destined, and I wasn't able to ask a question, so I wanted to, get you on a call and maybe come up with some things that I wanted to ask you both about your role along with the real estate industry in general. Now, that
Mhm.
was a few weeks ago, so I remember the general things you said about just your journey and uh,
Yeah,
how you got to be where you are now. But if you wouldn't mind giving a quick refresher, because I remember, someone came and they spoke about real estate. That's how you got interested in it in college. Then there was a thing with the kind of small business acquisition with, I think, the health spas, something like that.
yeah,
There were a
hmm
few transitions after. So if you wouldn't mind giving a
yeah,
quick
sure.
recap.
So it was it was a very roundabout journey, I guess you could say. So grew up in Philadelphia, went to Temple. When I was at Temple, there was a guest speaker, a guy named David Vacca. David was an interesting guy. He started his business with a $5 million loan from Walter Annenberg, where he went and cold called the top 100 money makers in the country. He started off doing flex office space. It was one of the first developers to do flex office space out in Westchester, which is outside of Philadelphia. Um, did well. He turned $5 million into $21 million of real estate in a slow real estate. This is early '90s, so real estate market was slow at the time, and he crushed it. So he comes in. He's a guest speaker. Interesting guy. He's 7 feet tall, and when you went into his office, everything was built for him, and you felt as though you were the one who was small inside of his office. Great, like he was what I wanted to be. He was a developer. He would made money doing things. He was entrepreneurial. He was what I was hoping to become. Invited him to a lunch where the idea behind the lunch was I just said, hey David, I was at your speaking engagement. I had some questions about what you've done and similar to what we're doing now. And so we go to lunch and he says, so what questions do you have? And my first question was, what job are you going to give me? Didn't have a resume. Didn't really know any. I was first generation college in my family, so took the chance. And he started off, and it was a different time. There really wasn't internships like there are now. Um, Said he didn't have a job for me, and I said, "Well, that's impossible. I'll come work for you for free." So he gave me a job. And at the time, I started off at like maybe $26,000, which at the time seemed like a lot of money. It doesn't seem like a lot now, but a different world. When I was working for him, it was a lot more property management. He had already invested the money. It was more just the operations of the property. I mean, when I say property management, it was even to the point where, um, if a guy called out, if it snowed and somebody called out from plowing the snow, I was the guy who had to hop in the truck and plow the snow. So it was good, but it just wasn't the direction of where I wanted to go. I mean, in all honesty, I was kind of bored. So at the time, when I was in college, I worked as a personal trainer. In addition to paying my way through school, I worked as a personal trainer and also bartended. I was still bartending when I came out and was working for David. The woman who owned the health club that I worked at came in. She was said that, coming in for drinks at my bar, and she was telling me about how the business wasn't doing well. There was another gentleman who was her partner at the time. He had gone off and started his own business. She was not doing well. So I went in and I offered to buy half, came in, bought half of the gym, eventually earned enough money to buy her out, started opening up other health clubs, um, had 5 or 6 health clubs going at one time. Fun. I mean, it was my friends. We were all working together. We would, go into work in sweatpants and sneakers. We were making good money. Great business. Like we were having a ton of fun doing it, except we didn't really know what we didn't know. So bigger clubs came in, like LA Fitness and Planet Fitness, etc. And they just had more money. They were backed by hedge funds or money up in New York. They were able to come in and do basketball courts, pools, and charge substantially less than we were charging. This is 2005. We lost probably 400 members in 3 months. So the writing was on the wall that we needed to switch. And so I sold off everything. And it's 2005. I'd been working in health clubs for about 12 years at that point and had to figure out what I wanted to do. So at that time, how we opened up clubs was we would go out and we would raise money through friends and family, private investors. There was a gentleman who I had spoken to about raising money or coming in. Um, Chris Wood, who's my current business partner. Chris was working for him. Chris had gone and got his master's from Temple, and was working doing commercial real estate finance at the time. This was around 2005, so it was really the height of commercial mortgage-backed securities when things were flowing. Money was flying. So they gave me an opportunity to go in and work for them. Wasn't really much of an opportunity because there was no salary, there was no benefits, it was purely commission. I walked in and they said, there's a phone book, and there's a desk, and we wish you the best. Did well from 2005 through 2007. Really didn't know what I was doing necessarily, just follow kind of directions as far as what they told me to do. I was getting deals closed. 2007 and the Great Recession hits. And Will, when I tell you that it shut down, financing shut down. Like there was nothing getting done. So instead of, a lot of my peers dropped out and went on to do other things. Instead of changing gears, I went back and started taking more classes. Like I was going back and forth between Temple, NYU, online classes, whatever I could do to educate myself. I was taking CCIM classes just because I figured, and I knew that eventually whatever was going through for the recession was going to change. And I wanted to be in a position to actually understand what I was doing at that point. Continued to do that up until 2010. The company who I was working for got bought by Marcus & Millichap. I go and start working at Marcus & Millichap. Things have gotten better in the real estate world. Understood a lot more about what was going on, hustled. Eventually, Chris and I, with another gentleman named James Conley, were running the Philadelphia office for Marcus & Millichap on the financing side. I also got promoted to running the institutional property advisors for Marcus & Millichap. 2014 comes, and we are completely out of the recession. Things are going well. We're being recruited by other companies. We wanted to be both broker and lender on the financing side. When we were with Marcus & Millichap, we were brokering everything. We would go to banks, life insurance companies, Wall Street, Fannie Mae, Freddie Mac. Colliers at the time was looking to buy an agency license. They were looking to become a Fannie Mae, Freddie Mac, and HUD lender. It was a great opportunity that they brought us on. The intention was that they were going to buy an agency license. We were there to be part of that whole process. Great opportunity, except Colliers decided at the time to switch directions and did not buy the license. So we continued on with Colliers. Colliers was great. We stayed there for about 3.5 years. But it wasn't the direction ultimately that we wanted to go. We wanted to be both broker and lender because we thought that we had more control, which we do, of our destiny, where if we were both broker and lender, we could broker transactions that were, let's say, construction opportunities. And then when they were ready to be refinanced, we could work as both broker and lender. Walker & Dunlop came in 2018 and recruited us to come over to Walker. Walker at the time was, or is still, one of the top Fannie Mae, Freddie Mac lenders and HUD lenders in the country. They were the opposite. They were a top Fannie Mae, Freddie Mac, HUD lender who was looking to expand their capabilities into capital markets, which were banks, life insurance companies, Wall Street. They were also expanding more into investment sales. And it was a challenge for us and a great opportunity for us to come in and open up the Philadelphia office for Walker & Dunlop. Walker & Dunlop is headquartered in Bethesda. At the time, their next office was up in New York. So they had no one in Philadelphia. Big market, great opportunity, challenge because it was opening something from scratch. It wasn't like walking in and getting hired from someone. It was great. We stayed with Walker for 6 years. Walker was a great company to work for. We just happened to get another opportunity with Northmarq this year where they gave us an offer to come over and again do the same thing. Northmarq is headquartered in Minneapolis. but did not have an office in Philadelphia. So it was again the challenge for us to come over and open up the office. Came over in March, and we've been here since. So there's myself, my business partner Chris Wood, and we have 3 analysts who work for us.
And is it still acting as broker and lender?
Is still acting as broker. So Northmarq is also direct Fannie Mae, Freddie Mac, and HUD.
Okay.
We would never go to it competitively. It's the direction of where you need to be at this point. We do everything from ground up construction to acquisition rehab to stabilized product. And we're both, the majority of our business, just by the nature of what lending we do, is multifamily. But we do multifamily, retail, industrial, self-storage, office, hospitality, anything that's investment real estate. So we have the experience to be able to do whatever our clients need.
Right. And just to clarify, I'm pretty sure it's the case that Northmarq, you guys primarily are providing lending and in general commercial real estate services as opposed to making direct investments yourself, like say a private equity firm would do. Is that right?
Oh, so Northmarq does both.
Okay.
So we do both debt and equity, and Northmarq also has funds where they can lend directly. It was the same with Walker. So Walker had their own private funds where they could lend directly. They don't. So, and then Northmarq also has a branch that actually is an ownership arm also.
Okay.
Where they truly own properties. It's kept separate from what we do, but there is a direct equity arm. But it doesn't necessarily mean we have to use it. It's the same as like, if I'm doing a multifamily refinance, I don't necessarily need to do it Fannie Mae, Freddie Mac. I can also go to banks, life insurance companies, etc. The advantage for us with coming to coming to Northmarq rather, is Northmarq is more heavily focused in capital markets than multifamily, meaning that they're more focused in life insurance. They're a big life insurance company lender, big bank lender, and there's room for them to grow on the Fannie Mae, Freddie Mac side, which is where we came in.
Got it. So there is a direct equity arm, but you guys aren't really doing that part.
We are. No, we are. We're doing both.
What was there was one thing that you just said, maybe it wasn't direct equity, but you were like, this different arm exists, but that's not what we do.
Ownership.
Yeah, okay. That's what I meant. Got it.
Yeah.
Well, I remember why I wanted to speak with you now, because there was a clear entrepreneurial theme throughout, everything you just said.
Sure.
So I wanna go through, I guess, the narrative bit by bit, because I had some questions that came up as you were relaying it to me. The first one I'm curious about, I imagine not. I don't know how often you do similar, the speaking, I don't know if gig is the right word, but where you speak to all the project destined students. I think
Sure.
you've been doing it for a few years, so I imagine you've spoken with and to a lot of different students. I'm curious, has anyone ever tried to, I imagine you get on calls like this pretty often. Has anyone ever tried to use the same thing that you did? Say, hey, what job am I getting?
No, that's a great question. But they have come to me for other things. Where whether it may not necessarily have been with me, but like asking for an internship through me or through Walker or through Northmarq.
Yeah.
Or so it's funny. So I guess maybe there was 400 students or so on our call.
Yeah.
Probably 10% to 15% reach out often afterwards. Similar to yourself, where last week I probably had 3 or 4 calls a day with Northmarq people or with Project Destin people.
Right. Yeah.
Where it's the person who's more entrepreneurial. It's the more of the go getter who calls up and asks. What would I do if somebody did that? I'd see the direction they go. It's if we have. The funny thing is that for our business and for most business, it's a timing thing.
Right.
Like where would I hire someone from Project Destined? I would in a heartbeat. Easy. Like I think it's a great program. I think you guys really learn a lot. I like the fact that you take the initiative to learn about these things. Totally voluntary. It's outside of school. It's great. Would I hire someone from Project Destined all day long? It wouldn't even be a second thought. But it's timing.
Right.
So we just hired 3 analysts when we came over to Northmarq. We didn't hire someone from Project Destin just because at the time with the 3 new hires that we have, we needed experience. So if we have someone who is coming on who has not had experience truly in working for another firm, um, we can't like we need analysts to be able to teach those people. So our next round of hires will be people who are just coming straight out of college. We
Yeah.
prefer.
Yeah, I was curious because you said maybe what is it, 10% reach out. If it's 400 people on the call, it's a lot of calls. And like you
Yeah.
said, it was 2 or 3 a day last week. So I figured there's a chance that maybe one of them, since you gave the story and it sort of worked for you, I
Mhm.
figured there was a chance that someone might have tried it at some point.
Yeah, so have people try that they have, but it's
Yeah,
also a different world now, right? Like,
right,
so for me, um, did what I did, uh, not necessarily completely because it was an assertive thing to do. It's because I didn't know any better.
right,
I didn't have. My parents were hardworking blue collar people, where they weren't in a position to say, hey, by the way, you need to go get an internship, you need to go get a resume. The high school I went to, it didn't prepare me for going to college. Um, College didn't prepare me for being in college. So it's just different times, right? Like the advancements that you guys have are substantially beyond where we
yeah,
were at the time.
yeah. Well, it also, I mean, it makes sense, right? If you're saying that you didn't really fully understand the entire landscape, but at the end of the day, you had a clear interest in something you
Sure.
wanted, and if you don't ask, you don't get. So it makes sense, and that's why I kind of like that. But anyway, that's sort of an ancillary question. What I did want to ask about with regards to the what is it, health clubs? I think, yeah, health
Mhm.
clubs, but essentially gyms. Um, so that's clearly an entrepreneurial thing. Like you essentially, it's almost like you're doing a mini private equity purchase, or it's almost like a
Yeah.
search fund. Like you
Yeah, it's
have the
it's it's venture capital money. It's
right,
friends, family. It's how you go and raise money, and it was why
right,
also why going into real estate was a similar avenue to an extent.
right.
Mhm.
But what I'm curious about is you not only made the investment, but you also then were involved in running the actual business, right? Because it's small business acquisition. So
Mhm.
I'm curious what the thought process was as far as doing that, because that's been a bit of a trend recently. Maybe it's MBAs, recent graduates, or just people in general are looking to acquire and run small businesses, and it seems like a great idea if it goes well. You hear all about the success stories, but at the end of the day, I would even possibly be interested in doing that, but it's like I don't have experience running that business. So is the idea that, oh, you figure it out as you go, and that's typically the case with a lot of things, or how do
Yes and no.
you? Yeah,
Yeah, I mean, yes and no. You're right on. Um, but we didn't know the things we didn't know,
right,
and that was why ultimately why we failed. I mean, if you want to know how bad it was, we had the opportunity. I mean, you know how big Planet Fitness is, right?
right,
We had the opportunity to buy when they first.
really,
Oh yeah, yeah.
wow,
The invest the people who opened up at first came to us, and we turned it down because we didn't know. We were like, $10 a membership. What are you talking? That's crazy.
right, yeah,
And we didn't know. We didn't know any better. We were kids. We were your age. When I started it, I was, and again, my business background was not business background. I was just assertive and took a chance.
yeah,
Um, what I do now is still very entrepreneurial. We run our own office. It's full profit and loss. It's our own business where Mike, I have contracts with the companies who I work for. So when my contract's up, I don't need to stay.
right,
So I can take my team to other places. Um, Still the same business, still running profit and loss statements, still running a business the same way we did when we were doing the gyms.
yeah,
Um, Would I do it? Would I do the gym business again ever? No, no, no way. It's a fickle business. Things change often as far as trends. Was it fun? It was great. Ton of fun.
Right.
Uh, Learned a lot. One of the biggest things I learned, and one of the biggest mistakes we made, was so afterwards. I mean, obviously, I knew people within the gym industry. So when I was probably working in real estate for maybe 3 years, 4 years, and a gentleman who owned a bunch of Gold's gyms went, and he was down in the Carolinas. I knew him through just being in the gym business. Came to me and he wanted to refinance his gyms. On an individual basis, none of the gyms he owned made as much money as we did from the facilities that we had. The problem is that on our bigger locations, we kept on investing money back into the location in ways that there was no return on an investment. We weren't making enough money from because the gym business relies on fixed costs and memberships and the expectation that members don't come.
Right.
So when he was doing, when I went and did his gyms and did the refinance, he had 10 gyms. He was maybe, let's say he's making on average $120,000 a gym, 150,000. Might not sound a lot on an individual standalone basis, but when you're making 1.2, $1.5 million from his gym business, is not terrible. So,
Right.
our mistake was scaling. We should have scaled more than worrying about putting so much money into individual clubs.
Given that you had the experience doing it, and I know you said maybe you said you certainly wouldn't do the gym business again. Why turn to real estate as opposed to acquiring a different type of small business or doing something analogous to what you just did, given that you had the experience and you learned from it?
I still look at acquiring other small businesses.
Okay.
Yeah, I mean, besides for what I do on a daily basis on the real estate side, I own real estate, and I'm always looking at new opportunities. If there's something that I can work in right now that's passive income, I would do it all day.
Hmm.
It's not. Why do I continue to do what I do? I love what I do. Very entrepreneurial. For the people who come to work for us, we explain to them in the beginning, it's not a 9 to 5 job. If you work 9 to 5, you're going to fail. I haven't taken a true vacation in 20 years, but I can go on vacation whenever I want.
Right.
Technology gives me the opportunity to be able to go wherever I want and still do my business. But I mean, think about it. Will comes to me and Will is looking to refinance his apartment building. Will's apartment building is $10 million. John can't call him and say, hey, Will, by the way, I'm on vacation. I'll get back to you.
Exactly.
It just doesn't work that way.
Right.
So, but it's still a business. It's a business within a business. And I still look for opportunities to, if you came to me and said, hey, I've got this idea, I may invest in it. Invest in things all the time that are outside of my daily day-to-day job.
Right. I'm reminded of, given the way you phrase it, that it's part of a larger corporation, but you have your own business essentially that you run. I'm reminded of, because the reason I'm doing this program is because I don't have much of a background in real estate. Typically, what I have done has been related to stocks or trading, that type of stuff. This past summer, I was at a small asset management firm in New York City, and I got to watch some of the people working there who were more senior, and they were financial advisors. And it's kind of very similar in the sense that they had their own business in a sense. They were part of this larger company, but they had their own book. They had their own clients. They were responsible for bringing them in, getting them to agree to work with them, and then setting the different fees and whatnot. So you're responsible for your own little segment of the business, and that sort of sounds. It's a different industry, so it's not quite that good of a parallel, but in the sense that you're within a larger organization, you still have the entrepreneurial.
So it's very similar. So think about it from the wealth management standpoint, right?
Yeah.
If you were working as a wealth manager You could be working for JP. You could be working for whomever. Um, your client's your client.
Right.
If you leave, your client more than likely will come with you if
Right.
they like what you've been doing. It's the same for us. My clients are my clients. And at the same time, people will ask me all the time, why don't you go open John's loan shop or John's finance shop? Because I can't. Because the profitability that I would make running as an individual business, I make more profitability by being part of a bit larger organization. And at the same time, I get the advantages of all the economies of scale that working for a Walker and Dunlop or a Northmarq offers. There's no way I could ever be as profitable on my own.
Is that purely because of the economies of scale? I mean, I imagine it helps
Yep.
sometimes with attracting clients having a big name, but
Both,
yeah,
both, but even with that, so when you start thinking about it, um, there's my business. So my business is finance. I have a business partner, Chris. We have employees who work specifically for just my team. We have office expense. I mean, we're in an A+ building in Philadelphia on the 38th floor. Uh, so between the cost of having employees, the employee benefits, the cost of the office, the cost to run the office, the cost to keep licensing, it all starts to add up. The profitability of as long as I'm hitting my numbers, my profitability is higher working for a company than it is working for me individually.
when is that not the case?
Depends on the business, I think. I think it depends on what business you're doing. Um, and if you're running in a business that doesn't have a lot of overhead, this could I run lean? I could. Would I get as much? Would I attract? I think where you would lose it would be the marketing aspect. It would be a lot harder for John Banas to convince somebody to just come and do business with him when it's a large project, as opposed to doing business with a large corporation,
Right.
a large company.
How do you attract new business? I imagine there's maybe when you're starting out, or if you had your own entirely separate firm, there might be some. I don't know how relevant cold calling is. Like, hey, I'm John. Do you want to work with us? Something like that. I don't know how prevalent that is this type of industry, but I guess the general question is, yeah, how do you attract new clients?
Extremely. So,
Okay.
so for me, there's a difference. There's points in your career. So with what we do when you are coming out of college, you don't work as a producer. You start off working as an analyst or asset management or some sort of role that is an introductory role. It's important because I may be a managing director, but I'm still an analyst. I'm always an analyst because I'm
Right.
still always looking. I'm still doing all the analytical work. I'm still going through the models. I'm still going through all the information. So the kind of the career path, at least for our team, is that you come on as an analyst, you work as an analyst, then you move to a senior analyst, you move from senior analyst to an associate producer. As an associate producer, where you're getting your business from is twofold: is from roll off that from the business that Chris and I are doing, where we bring in business and then we'll work with one of our associate producers and have them work on deals with us. The associate producer is also going out and they truly are cold calling. Marcus and Millichap had one of the best training programs that I've ever seen for going and building your business. Very simple model. For us, you go and you get a database of what we call qualified leads, qualified clients. How you build that database is by doing research. So you don't want to just know, hey, this is Will MacLeod. You want to know, hey, this is Will MacLeod, goes to Cornell, likes real
Right.
estate, worked for this. So more than just knowing the person, who the person is. It's 1,000-person database. So it's 50 calls a day, 250 calls a week, 1,000 people a month. Don't get hung up on one person. Don't need that many clients to be successful. Introduce yourself, show them a value add, show them a proposition, and give them a reason to do business with you. That's how you build your business as a junior. It's kind of how you build your business as a junior, working your way through a business, regardless of whether it's wealth management, um, whatever it is. That's kind of a good model to follow. For me, at my point in my career, I don't really need to cold call people because most of my business comes from either existing clients or referrals. We have a very large referral business where either existing clients or people who are in the industry who send us business.
Yeah. I think that again, that's another parallel to wealth management because when
Sure.
you start out as an advisor, maybe cold calling is less prevalent now than say 10, 20 years ago, but you're one of the guys who was just doing LinkedIn outreach, just messages all day, every day. And that's partly what I'm curious about the sales process, or I guess the client acquisition process,
Sure.
because I so last summer I was at a asset management firm, but the
Mhm.
summer before that I actually had a sales job, but it wasn't very traditional in the sense that it was entirely remote. So I was in my apartment all day, just on the phone, and it was commission only. So it wasn't, it was kind of one of these newer, I don't want to say internet things, but they were selling coaching programs and for a certain thing related to a certain type of investment. And the idea was that people would sign up and they would learn how to make money doing this thing. And it was a huge program. It was the best, or at least it had the most customers of its kind in the country. So there was plenty of leads, and I think there were maybe, I don't know, 200 other people doing cold calls. And the reason for that is because it was commission only, so high churn. People come, they go.
Yep.
But I
Mhm.
did it for the summer, and it was, I'm glad I did it. It was interesting, but I should say it wasn't cold calls, so they would opt in to some sort of lead magnet. So we'd have their information for something, but I'd make the first contact. I'd be like,
Still cold. It's still a cold call.
exactly, yeah, it's pretty much because they wouldn't know. Some of them would, if it's the same day, okay, they remember. But I'd say, hey, is this John? You're like, yeah. Who is this? Like, hey, this is Will with XYZ. How you doing? And they're like, good. What are you calling about? It's like, oh, it looks like you had requested information on learning more about making money with blah blah blah. Does that ring a bell? They're like, oh yeah, now I get it. So the first part is you have to kind of remind them, and
Hmm.
obviously get a lot of people hanging up on you. But and my role was to set the appointment. So there's a setter and a closer, and the closer is where you try and get them to sign up. But the point is, I'm curious how similar, or rather, what the calls look like when you're doing
It's great.
outreach for. Yeah,
It's great. Great question. Sure,
yeah,
because we have a specific program for it. Very, very straightforward. Um, so all these, so for us and our team, how we have the associate producers, again, it's 50 calls a day, 250 calls a week, 1,000 calls a month. And all it is purely an introduction. Don't get over your skis. Don't get somebody who's going to start asking you questions because I'll tell you what, and this is from learning lessons, because when I first started cold calling, people would ask me questions. I wouldn't know the answers, and I would slowly hang and this was before cell phones, like I truly was on a phone,
yeah,
slowly hang the phone up, pretend that I got disconnected, get on the computer, look
right.
up the answer, and then call them back.
Did that work?
Not really. It wasn't great. So the difference for what we have our guys do, it's very simple. I'm calling Will. Ring ring. Hey Will, you answer. Hey Will, this is John Banas. I'm with Northmarq in Philadelphia. We're a commercial real estate firm. I work on the financing side. I work on Bob, and so if it's somebody else, they're saying I work on John Banas and Chris Wood's team. We just closed 123 Main Street. It's right down the street from your 224 Main Street. We saw you that you're the owner of property. We're surprised that I'm surprised our paths haven't crossed, but we figured we'd reach out to talk about what's going on with your portfolio and tell you a little bit about the financing we just did. That's it. And they're not even going into detail.
Right.
doing the next step is that someone would ask a few questions, and the associate producer would then say, um, so why don't we do this? Why don't we either set up a lunch? Are you available next week? Or we can set up a call. We'll go jump on a Zoom call. We can go through some things, and we'll talk to you more about the opportunity. Does that work? What day? Here's the lead.
Right.
What day works for you?
Right.
Period. Because it's not a yes or no answer.
Right. Exactly. You assume the yes.
It's just that simple. Because then their goal in the beginning is to have it set up a meeting for me and Chris to go with them. That's all. It's just that easy.
And what does that meeting look like? Is that the final step? I imagine it's
No, not even close. It's
right.
This is all business development.
Right.
So one of the things that you I'm sure you'll know, have salespeople called you?
Maybe I've had very few.
Okay.
I've had ones where I sign up sort of
Mhm.
analogous to what I said, where I, opt into something and then someone calls me. Like I've been on sales calls, but I knew they were coming. Cold calls, I haven't really had much experience with.
So one of the biggest things that people don't do when they do cold calls is follow up.
Right.
Call you once and that's it. That's why the Marcus Millichap way is 1,000 calls a month, and you call the same 1,000 people the next month, and the next month,
Yeah.
and the next month, and eventually you get a meeting set. And so the meeting is not to necessarily get business. You might, but the world's about timing. So the chances of me walking into Will's office and Will says, "Hey, I have a deal for you,"
Right.
maybe not. But what I'm doing is I'm showing him what I do.
Yeah. You want them to think of you when they are ready.
Completely. We're also making sure that it's on something that we've recently closed. Like we just closed a $36 million construction opportunity, 175 units up in Lancaster, Pennsylvania. We will go into central Pennsylvania and go through every developer that's in central Pennsylvania and talk about the value add proposition that we did for that opportunity and why the client, who they will know also because everybody knows that, all the clients know each other. They'll know the client. They'll probably call the client. The client will give us a good referral, and it'll give us a chance to get in the door. Do we get business the first time? Not often. The second time? Maybe. Third time? Probably. Because once they start, most real estate developers, I mean, if you would think about it, most real estate developers or owners who are successful already have relationships.
Right.
So it's timing. Someone has to mess up. Someone has to not do their job for you to get a chance to get into the door. Or you have to do something that's completely different than the other person. And that's what we try to do. We try to create a value add proposition where we're not just saying, "Hey, give us the business." We're saying, "Hey, give us the business, and here's the reasons why."
Right.
The last opportunity, it's a client who we've done a lot of business with. Most of the business we've done with them before has all been on the permanent side. This is the first construction opportunity we did with them. We were able to. They came to us and they said, "Hey, we're only getting to $30 million in financing. Can you take a look at this and see what's going on?" And so we start running through the numbers and we're talking about it. I'm pretty good with numbers. Like I can pick it up quickly. I'm like, "Guys, 30 million is not enough. You're short. Something's wrong. Send me all your performance. Send me all your information. I'll go through it and let's find out what's going on." They said, we go through it. There was a mistake within their model, in the financial model, and there was multiple.
Really?
So we were able to take their $30 million loan and then get them the $36 million loan instead. So if you're a client who hasn't worked with us before and you hear a story like, "Oh, and by the way, the terms were great," like beyond what anybody else is getting right now. So if I walk into your office and tell you this, or will you at least listen?
Right.
Probably.
Yeah.
Probably. If I just walked in and said, "Hey, I'm another guy selling another thing that's the same as everybody else," do you really care? Not really.
Right.
Find the value add. Find a way to sell. Find the questions that don't have no answers or yes answers.
Right. I'm, and you mentioned it's about timing and that these people already have people that they're working with, so everyone, it's a timing thing, and that kind of made me. I'm curious. Like, I imagine all these people. Obviously they've been contacted before many times,
Mhm.
but do you ever get to a point where if you're in a certain area, there are no new leads and like everyone already knows you? That's the goal, right?
No, no, you'd be
No.
surprised. I mean, you'd be surprised that there's always someone new coming into an industry. There's always someone new looking for something different. There's a lot of developers out there,
Hmm.
a lot. And there's also a lot of developers that you would think would have more knowledge on some sources that they just don't. So if I call you and you tell me, hey, I'm getting these great terms, okay, well, those are great terms. And I'm very, very transparent with people.
Right.
Where if you're getting great, if you have a good lender, you're getting great terms, well, great, awesome. Keep on working with that lender.
Right.
They're a really good lender. You should keep on. But if anything ever comes up, or by the way, Will, if you ever need anything like comparables within a market or reports run, CoStar reports, Reese reports, if you need something, just give me a call. Happy to help you with it.
Right. Yeah. I mean, yeah, sales. There's a lot of concepts that stay the same regardless of what you're doing, and one of them is they would say you don't try and you never want to force it. Partly because the the way you need to be thinking about it is, oh, you're all you're doing is trying to find a match, a fit between, they have something they need, you have something that you can provide them. It shouldn't be you trying to shove it down their throat. And the reason for that is because maybe that works a little bit, but then you develop a reputation and a track record. So, and hence why you said you always, uh, one side just morally, but also from a business perspective, you want to tell people the truth because that way they remember.
Well,
So
you also want to do things for them, right? Like
right,
I do a lot of pro bono stuff. Like I do a lot of things that I'm not making any money from initially, that
right,
I'll make money for down the road.
yeah,
A great example is, so I've got a really good wealth manager. I've been with him for years. I have a young guy who I play golf with, who I know, who's doing well. He's got a good wealth management business, etc. Really wasn't interested in what he was pitching because I like my guy,
right,
but he had perfect timing. I was leaving Walker and Dunlop. I had stock. I had 401ks, etc. that I had to move over. And he not only did he came in with a good idea, like to do something different. That was a little bit outside of what my normal guy. I wasn't leaving my normal guy, but I gave him the stuff that I was transferring over because he had some different ideas than my normal guy does. But the reason he won my business is because he was persistent. He wasn't pushy. He was persistent,
right.
and he showed me a value add. So for me, that's how I like to do business. Try to treat others like I would want to be treated. Where show me a reason to come work for you or work with you.
Right.
Just don't just ask for my business. Give me a reason for it. So
Yeah. So that you mentioned going back to I imagine it's the same in general, but let's say your team specifically, you come in as an analyst and there you're not a producer, you're not generating business per se, you're doing some sort of modeling, maybe financial analysis, whatever it is. Does the I guess when do you so I imagine the sales part, like the getting clients, producing business, along with the modeling or the being an analyst or the two main components. The modeling part, you learn it, you get the training, you have practice doing that. With the and you mentioned at Marcus and Millichap they had a training program for you guys. Let's say when someone becomes, I think the first one was either an associate producer or a junior producer, whatever it is.
hmm?
Are they kind of thrown in and say, hey, go generate business? Or
No,
that no, that's when you said they work, they kind of like shadow the
they they,
when
they
did they learn the sales skills?
they learn the base. So it's steps, right? Like
Okay.
so Will comes in. Will's working for us for however long, and Will gets to a point where he's like, I want to move off into being a producer. Okay, let's get you on the path to be. If every single one of my guys turns out to be a producer and does better than I do, awesome.
Right.
Means I did my job.
Right.
So anybody who comes to us and wants to be a producer, we get them on that path to being a producer. It's not instantaneous. Like they need to have proven them. So you can't just walk in, and if you're not doing a good job as an
Right.
analyst, you're not
Yeah.
going to move on. But if you're doing a good job and you're ready to move on, good. Why? Because it's creating bottom dollars for my business.
Exactly.
You can go hire another analyst. Like if ultimately I have a tree of analysts who become producers who then have analysts underneath them and it continues to grow, awesome. That's great. That's the goal. We don't throw them in the deep end. Again, what they do is they're there is to do is to make introductory calls. After the introductory calls is when Chris and I come. They're there to set up meetings. Your goal is to set up a meeting, whether it's in person or online, with a client. For the first 6 months to a year, you don't really have anything else to do. Set up meetings. Those meetings will generate business. You'll make money from those meetings. And then when you get to a point where you feel as though you're good, you're ready to be off and doing those meetings yourself, as long as we feel confident, we'll let you. Go ahead. Start out small. Start out with smaller transactions or smaller developers who are a good runway into being bigger developers, because a guy who does a $2 million deal does a four, then does a four, then does an 8, and does a 16, and does a 32, and all of a sudden he's like bigger. Great. But it's the working of the business. It's a long term strategy. Um, it's not an overnight thing. It's not an overnight success.
Right.
But if you hustle, it can happen pretty quickly.
Yeah. So to be a successful producer, even to be good at that sales aspect, let's say, how much of it is because, for example, what I was doing, it's B2C, which is almost entirely persuasion based. Like you're trying to get them to, and the training was, oh, you're not convincing anyone. You're showing them that it makes sense for them.
Mm-hmm.
But the idea is that you're B2C, you're kind of showing them that they should do it, as opposed to wealth management or real estate, where part of it is an objective deal or value, or there's some, let's say, technical component. So in terms of being a good producer, how much of it is, let's say, communication skills or selling or persuasion or being a good talker, as opposed to the actual deal and knowing the numbers and knowing what you're talking about?
They go hand in hand.
You
Definitively
just
go
need
hand.
both. Yeah.
You 100% you
Right.
need. Because if you go and there's plenty of people, it's a great question, by the way, because it's a unique combination. Because it's a unique combination who's somebody who's really analytical, but also can sell.
Yeah.
Because for the most part, with almost everything we do, aren't we always selling?
Yeah.
You want to date someone, aren't
Right.
you selling?
Exactly.
You want to buy a car. Even if you're the buyer, you're selling.
Right.
So most things, when you boil them down, you're selling. You can't sell to sophisticated real estate developers and owners without being analytical. Because if you get questioned on the process, you need to have the answers. Because if you don't, there's not enough confidence. Because remember, for what we're doing, you're taking someone's livelihood and their business into your own hands. I mean, there's times where we're doing transactions and it's stressful because if I don't succeed, it could potentially put the business under. So to give somebody that, it's not just sales. Sales get you in the door. You have to be analytical to continue it.
Yeah. When you said the we're always selling part, I agree, because everyone wants different things, and you're not going to be handed it, so
Mm-hmm.
you have to. A lot of everything is communication, but it's reminded. I was talking with someone maybe 2 days ago, and it's an idea I've heard before, but we were talking about how do you measure intelligence, and obviously there's different types of intelligence. different ways you can look at it. You can look at it in a traditional sense, but one thing I've heard is that it's just, do you get what you want, right? Because at the end of the day, it's everything is meant to be serving a purpose, and you can argue, oh, if someone has this very advanced knowledge of this type of thing, sure, it's they have knowledge of that, they're intelligent, but what's the purpose it serves? So I thought that was a interesting definition, and I was reminded of it.
Yeah, there's a whole study that talks about theory of
Yeah,
intelligence, because
right,
let's a doctor's person who becomes a doctor is very smart, right?
right. Well,
Fair?
in one sense, yeah,
In one sense, correct. But if you ask them to go fix their carburetor, could they?
right, exactly. Or get on a sales call or something else.
We're
Like
getting on a
there's
sales call.
right, yeah,
So it's all relative to
exactly,
what you do, and we tell the people who come work for us all the time. One of the biggest things, everybody comes in is more than smart enough. That's not the issue.
right,
You got to love what you do.
yeah,
Like you really do. Like and you have to try different things, and you have to put your thinking cap on, and you have to, we equate it a lot to what we do to a puzzle. So everybody does a puzzle the same way, where you get the box, you open the box, take the pieces out, put the pieces on the table, flip all the pieces over, put the box on the side, so you have a picture of what the puzzle looks like at the end. But every single person, after you get done that part, does the puzzle differently.
right,
So how you do the puzzle and how you get to the final solution may be different, but you're starting out with the basics, because the basics for us are good Excel skills, good financial modeling skills. You may, like people we hire, they may or may not become a producer. It's okay. They'll figure it out as they go along. But putting the pieces of the puzzle together, that's the biggest challenge. And that's for a lot of things. So like it's the more you learn how to put the pieces of the puzzle together, the more successful you are. And you have to love what you're doing. And the monetary aspect of it is secondary. You got to love what you're doing first.
right,
Because if you get up every day and you're miserable going to work, you're just not going to be successful at it.
right, yeah. So why do you love what you're doing? What is your day to day look like, and why do you love that?
It's a challenge every day. I'm solving, like today even. So my my last couple weeks have consisted of closed a $36 million transaction last week. Very complex. A lot of moving parts. We are in the process of doing somewhere between a $70 to $80 million refinance of two properties up in New Jersey. Lots of moving parts, figuring out solutions to things. There is senior financing. There's preferred equity involved. We had to do a recap on another transaction in order to bring equity to it. Lots of moving parts. So for me, I have to get up and solve a puzzle every day and think about things. It's the challenge. Like, think about, there's a sense of satisfaction if you like doing crosswords, or if you like doing word puzzles, or if you like doing puzzles, there's a sense of satisfaction when you get to the finish line. For
Right.
me, with all this stuff, there's a sense of satisfaction when I get to the finish line. It's a
Has
win.
that been the case throughout? For example, let's say one of the analysts, right? They're working on financial modeling. Is it when you're starting out? Is it? I imagine it's kind of like it's partly a training period. You have to get the hard skills, and there's probably less of that than let's say your role, right?
No, I mean,
No?
for me, I'm learning every day.
Right,
Every single day I get up, I try to learn something new.
right,
So I'm always like, do I get past the basics? Sure. But like, I'm always looking at a better way of doing things. All the time I'm looking at, like, even when we're doing Excel, I'll jump online if I'm trying to find a solution to something. Like I really like Excel, so I'll do a lot of like formulas, etc. If I'm trying to figure out something, I'm still trying to figure it out.
right,
I'm gonna jump online and see how someone else did it, where they may be at a different point in their career as far as their learning, but we're always learning. I'm always asking questions. I'm always looking for the resources that are going to help me do my job better. because I enjoy it. I want to be the best at what I can do, what I do all the time.
Right. What about on the other side for the analysts? I imagine they have less variability in the things they're doing, less of new challenges compared to you, right?
No,
Really?
yeah, we push them.
Okay.
We really do. Yeah, because so think about it. So even from the standpoint of what they've worked on today.
Right.
So today they worked on. We are doing three property portfolio where we're doing full refinances of everything. It's around $60 million. We are doing supplementals on three loans that we did with Fannie Mae already. So it's completely different than what they're doing on those other deals. We had to go through and edit some personal financial statements and do reconciliations on as people are sending, because they're doing the modeling, they're doing the due diligence, they're working through the loan. Like today, I played lawyer, where we're working through intercreditor agreements between a preferred equity player and the senior lender. So I'm always looking at things, and then I'm not an attorney. So for me, this is all a learning experience. Great example. We're working on a property that's an industrial property that came back, and the environmental came back with elevated. It had elevated levels of two recognized environmental conditions. So I now have to go and learn about those hydrochlorides or whatever it
Right.
was, where figuring out how we were going to remediate.
Right.
Again, it's just different pieces of the puzzle trying to get to an
Right.
ultimate.
But it would be you learning about how to handle this new situation as opposed to the
Both,
analysts who their role
both,
is to do the modeling. No?
both.
Okay.
Yeah, we have them looking up the same
Okay.
things. Yeah. So and then even as I find solutions, I go back and I share with them. Like so that today, just I wasn't in the like I'll be in the office the rest of the week, but I wasn't in the office today. Well, we're off and on Zoom all day or Teams all day long. Just talk like if I find a solution to something or a problem to something, I'll still loop them in and walk through them with it, so that it's a constant team effort, so that they're understanding more of, and they may not understand the concept now,
Right.
but eventually it'll come up again.
So they're doing things and learning about things besides just modeling
Yeah,
and due diligence.
all day long. Yep. Yeah.
Okay, so the only thing would be because they're not a producer yet would be the sales part.
Correct. But again, this is all training them for what they're ultimately
Right.
going to try to be. Where we'll also go through and we'll go through different sales calls and people who pitch us and talk about the good parts and bad parts and things that people do correctly and things that they don't. Like you sold me on coming onto your podcast.
Right.
If you didn't ask, you never
Right.
got it.
Yeah.
Right? So you didn't just ask, you also explained it. You told me what it was about. Thought it was kind of cool. You gave me a reason to do it, and so I chose to do it. But you
Right.
still sold.
Yeah.
You did a good job of selling.
There we go.
Right.
So I'm the probably the main thing that I'm interested in, or I guess the big question, and kind of we've touched on a lot of things that are parts of it, but what I'm curious about is how do you not become an entrepreneur within real estate, but how do you get to a point where you are doing something entrepreneurial, or maybe you have your own business like you do, or you're an investor. The point is you're not just an employee, and that's the goal of the Project Destin, right? They say how to become an owner, and it seems like the general consensus, both in things I've heard from other places, along with I think even Cedric himself says that you want to gain experience working for a few years at one of these firms, maybe a firm like yours or a different one, so that you're in the weeds, you're understanding it, and then okay, also maybe let's say you do maybe you buy a duplex or something to
Mhm.
get a little bit of experience, and then once you have that, then you can go and do whatever it is, start
Mhm.
buying into deals or whatever it is. But what I'm curious about is what does it take to do that, right? Because obviously you get the training, you understand the whatever it is, the modeling, all the different terms, due diligence, you understand the process, you're in the world. But once you have that, what does it take to actually be an entrepreneur or be an investor? Because to me, it seems like, and maybe I'm mistaken because you said that in one of your examples that they had a lot of errors in their model, but to me, it seems like the modeling part isn't necessarily that. It's relatively straightforward. So the best investors isn't because they are just so much better at modeling than everyone else. To me, it seems like it's primarily about identifying whether something's a good deal or not,
Mm-hmm.
and the way you do, and also having access to capital and investors and being a network essentially.
Mm-hmm.
But aside from that, the core skill is whether or not something's a good deal or not. And to me, it seems like, I guess, yeah. How do you? Firstly, is that assessment correct? Secondly, how do you get to that point? Is it just reps? Because it's not like a clearly defined thing. So I guess the broad question, and I've explained a bit of my thought process, is how do you become successful in real estate, maybe as an investor or whatever it is, in an entrepreneurial context?
Mm-hmm. So it's reps. It's working for good mentors. It's going and working for a company where if you go in and you truly want to be an owner and an entrepreneur, you need to be under somebody who's an entrepreneur and who's going to take you under their wing and be a mentor for you. Or you just have to learn it yourself. But learning it yourself is challenging. So let's think about it, right? Like it's pieces.
Yeah.
Do you want to develop ground up? Do you want to buy stuff and rehab it? Do you want to buy existing? Do you want to buy multifamily? Do you want to buy retail? Do you want to buy office? What's the direction you want to go? So then you have to find the mentor in that field, and you go into it with eyes wide open on both ends, where you're trying to learn as much as you can, but also to see whether it's a viable plan. So let's say you want to build ground up. Well, you want to go and work for somebody who just owns stabilized properties. Got to learn how to go work for a developer. Go work for them in their financial, because the financial modeling is one thing, but you also need to be able to understand how to source things, how to control things, how to work with subs, how to work as a GC, how to control a GC, how to get permitting. So it depends on what your ultimate. You have to find the end goal first, and then work backwards from there. If you want to, for example, you want to own multifamily, and you want to own garden style multifamily, 25 to 150 units. You would never go to work for somebody who is doing scattered sites. You also wouldn't go to somebody who go work for like a Carlisle who's going to own way bigger properties. You go find a mid-market guy, go work for them, give them a reason to work, and then go learn about it, figure out not just the positives, but to figure out the mistakes. Put together a business plan, and then go and ask and talk to people for money. Make sure you have good credit. Save your own money so that you can put money in. But if you came to me and said, "Hey, John, I know you're in Philadelphia. I just found this property. It's out in King of Prussia. It's been sitting. It has the opportunity to if we do some lower income housing, we can increase the density bonus. There's tax incentives. I have the ability because I'm a first time buyer to be able to do this and that and that. And you give me reasons, and you're putting some of your own money in. Your money doesn't have to be equal to my money.
Right.
If it's a good enough business plan, I would consider it.
Right.
So you kind of don't ask, don't get.
Yeah. Closed mouth doesn't get fed.
Closed mouth doesn't get fed. So if you have to figure out what the end goal is, and I don't know what that is for you or for anyone else. For me, so my business partner Chris owns and develops properties also. I don't. for all my stuff, I come in as a limited partner. I don't want to be the day to day guy. It's not what I want to do. For me, I prefer to do my day to day job, what I do now. I prefer to look for new opportunities, whether they're other businesses, etc. And then I prefer to come in on a limited partner basis. But at the same time, the advantage I have as far as coming in on a limited partner basis is I'm working on opportunities that I've underwritten, that I've underwritten the sponsor, that the lender has underwritten, that other equity is underwritten. And do I run risk on things? Sure, my portfolio is diverse, where there is opportunities I go in where I know that there's a higher risk level, may not invest as much, but I have a bigger chance of return. And then there's things that are very straightforward that I've invested in. So my portfolio stays diversified. I look at different opportunities and I look to see a lot. For me, it's a lot of who the person is. If you come to me and I see that you're a hard worker and that you're hustling and that your plan makes sense and that you take criticism well and constructive criticism, then more than likely I'll invest. If I go and you think your plan is the greatest plan ever and it has no mistakes and it's infallible, I am not going to invest with you because that's just silly.
Right.
So,
As far as identifying the end goal,
mhm.
where you're gonna go and working backwards, it seems slightly like a bit of a, what is it, a chicken and the egg situation, in the sense that
But
both from, let's just say the example you gave, like, okay, there's all these different maybe asset classes or sub
mhm.
categories. You could be a developer, you could be doing this or that, whatever. Maybe you want to focus on data centers. Who knows? Um, I guess how would you know what you want to do before you have the experience, right? It's
you
kind of
you don't
exactly
you don't will you're 20
you
something. How old are
right
you? 20 something. You're
20
20 something years old.
20, yeah,
So fail.
right,
Fail on a couple things. Try it out because it's never really a fail, right? If you let's just
yeah, I
say
agree,
let's say you go and you start working for you come out and you get your job and in your first job you're working for a multifamily developer. He may or may not be good. You'll find out. You'll be able to
right,
figure it out. You're smart enough. If you just keep on going because you're afraid to go take another challenge, well then that's completely different. But for me, but I started doing this when I was 38 years old. So if you get a 14-year runway ahead of me, if you're 24 and you start doing, would you be okay with being a managing director for a national company by the time you're in your 30s?
yeah,
I would.
right,
I would have loved to have done this previously. But at the same time, the mistakes that I made me who I am today. So while the gym business may have ended up not going the direction that I would have hoped it would have gone, still learned a ton from it.
right,
So it's the question of not be like, do you want to bounce around? You don't want to bounce around.
right,
You kind of want to go into and you'll know the difference. Like if you go into a job and you talk to them and you say, hey, if you start telling them that about what you hope to do in the future, and they blow you off, it's probably not the right person for you.
right,
So be selective. You're graduating from Cornell, is that right?
yeah, yeah,
But you're gonna have a lot of options.
right,
So figure out what you want to do, right? And it's not just going and like it's doing stuff even when you get past this, where like the project with Project Destined, like you took the initiative to go and get involved with Project Destined. Why?
to me, I was curious about it as a possible career path, or even just something to learn about, something that I didn't have much experience with. And I'm like, okay, maybe this could be something that I might want to do. Let me try and learn a bit about it and then see if it is. And I think one thing that's kind of been somewhat of a theme. Like I mentioned I did an asset management thing. Before that, I had a sales job, which was again something that was totally new to me.
Hmm?
Before that, maybe a few months before, I was doing freelance marketing. I was reaching out to, I emailed some companies. I ended up working with one. They're like, and I did some marketing stuff, and it was kind of like I sold myself. That was even before I had a direct sales job.
Mhm.
And so I always say I'm interested in a lot of different things, and even stuff like this. Or I think I mentioned in my email that I've been going around just interviewing people on campus because it's fun. So I have a lot of different interests, and partly it brings me to something that you said, because you were saying that, okay, if something's not a good fit, you learn from it, and then you pivot. And I
Mhm.
100% agree. I've clearly done that a few times. Like I did not do very good in my sales job. It was my first time doing it, and some of these guys had been doing it for a while. But at the end of the day, I was in the, I don't know where I was, but I wasn't in the top half, maybe like the 40th
Mhm.
percentile. Like I'm glad I did it, and I learned a lot. And maybe if I do something again similar, then I'd have more of a starting point. So it's still
Or
good, but
or we look back and you self reflect and you
right,
go, what was missing?
yeah,
What could have helped you do better? Did you ever go and ask any of the top guys what they were doing?
a little bit. I could have done more of it though. So
Sure.
and part of it is, part of the larger point is that I think that, and this relates to deciding what you're going to do. I think that assuming you have a base level of intelligence or ability to understand things, which I think I do have, you can achieve success in any domain, any sort of path. It's just a question of how natural it comes and how much you have to force yourself to do it. Like maybe you're naturally inclined to do some things more than others. Like, I've always been good at math. I've always been pretty good at it. So
Mhm.
in high school, I took 5 college math classes at the local university, which no one else did. And could someone else have done that? Maybe, but it would have taken them maybe twice the amount of work. Or
Mhm.
something like, let's say I wanted to, I don't know, make my varsity basketball team. I played soccer. I'm not that tall. I didn't really play basketball. I didn't jump super high. So could I have done it? Yes, but maybe it takes me twice the amount of work. So
Mhm.
it's like you can always, with a sales thing, for example, I could have, you can always do more in terms of hours, although it's not always pure work. It's about positioning yourself right. But yeah, I could have, they had some trainings. I had some calls with people, but you can always do more. And so that's kind of leading up to my question is, how do you know, and I guess the answer is you don't, but how do you decide when to pivot or if something makes sense?
Um, it's a great question. How do you know when to pivot? If you don't feel it, if you start looking at what your end goal is and you don't see that this is giving you a path to it, and you'll know, you'll will it happen right away? No, not even close.
Right.
Um, we left college, so we left Marcus. We, by the way, we were top 5 at Marcus and Millichap. Do you leave when you're top 5? Maybe. Saw another opportunity. We were
Right.
with Colliers. We're doing very well. Nobody was nobody. We did great. Numbers were good. Nobody bothered us. We just had another opportunity come along. Walker and Dunlop did really well. Loved it. Another opportunity come along. We had other opportunities coming along because we always kept our eyes and ears open. We looked to see what else was out there. Um, we don't settle for things. I mean, it's very easy to settle. We have a drive to do more and it's beyond monetary. It's more of just, I love the challenge of being able to open up the office. I mean, that was great. Didn't make any extra money because I opened up the office, but it was a challenge and it was something that I want. Project Destin, I don't make any money from it. I do
Right.
it because I enjoy it. With figuring it out as far as what you want to do, I mean, I wish I could give you a magic answer, but you'll know. And the difference is that you got to trust your instinct and when
Right.
you know. Or if something isn't working towards how you want it to be, what can you do to persuade someone make to do it differently? Like if you go into your first job and you're just not getting the mentorship or the direction that you're getting, would you just quit? Probably not. Shouldn't. You go and you talk to the person and and see if there's a reason behind it. Tell them what you're looking for, and if they get it, great. If they don't, what do? You ask again. They still don't get it. You ask again. Continue to ask, and it's going nowhere. Then it's time to move on. But for the most part, if you ask in the right way, you'd be surprised. And then if it's not the right person, then it's just not the right person. That happens too. You have to try things, man. And then it also has to do with your own accountability.
Right.
Where for me, I could have when things went bad, and well, things went bad. Like when I tell you that in from 2007 till 2010 was it bad? It was bad. Like I thought it was not like I was making no money. I could have easily just gone back and started bartending again. Or I loved bartending. There was never anything wrong. I made a ton of money. I had a fun time. But was it my end goal? It wasn't. You be a 65-year-old bartender, it's probably not the best path. You be a 30-year-old bartender, it's a lot of fun.
Right.
40-year-old, but it wasn't for me. It wasn't the direction of where I wanted to go. So knowing where I wanted to go in the long run, I could have waited for other people. Instead, I took the initiative to go and get more education because I was able to, and I'm going to bet that you're more than smart enough to be able to figure out what your weaknesses are. You work on your weaknesses and continue to work on your strengths.
Right.
I'm the same as you are. Like reading stuff, I'm not a great reader, not a great writer. Am I good with math? I'm pretty good with math. Always have been. So for me, I focus on the math part. My daughter, she's your age. She is better with the reading and writing part. She's going to be a lawyer, or it's not so geared towards math. So you figure out what your strengths are, and you just run with them, and you try to continue to build on your strengths. Continue to. I mean, one of the biggest things is just to continue to do what you're doing as far as asking and talking to other people. Ask a ton of questions. Like I ask questions every day from people. I try to surround myself with people who can help me, both on things that I need to get done, as well as helping me to enhance my career. I ask a lot of questions from people, especially people who are more successful than I am. Um, continue to grow as far as your career goes and enjoy it.
Right. Yeah, I agree. And I think that, one, you can't, in good faith, pivot or write something off if you haven't really tried to make it work in the first
Sure,
place, because that you,
correct.
so that's part of it too.
And
Um,
also don't discount your own accountability
right.
because it's not always just the other person because you never
Yeah,
know what.
exactly. That's what I
No,
mean. If you're not fully giving a good effort, then it's like,
yeah,
can you really say it's not for you? It's like,
no.
well, then try. So
And so like if you go into to a job, right, and you're there for 3 months or 4 months, and your boss is not being a very good mentor, and it is there's it's not going into, you could just quit, right?
right,
But what if you actually ask them what's going on? How do you know that he doesn't have something or she doesn't have something personal that's going on that maybe they were just missing it? Maybe they forgot. Maybe they didn't know that you wanted this work. You don't ask, like you said, you don't get.
right.
So at least give it a shot.
As far as speaking about evaluating opportunities, and I know you have the experience with different types of investments, certainly the small business and real estate, and
Mhm.
I think you mentioned others possibly. But my question is, how would you evaluate, I guess, a career in real estate and obviously there's different types, from as an opportunity as opposed to, let's say, going into finance, or I don't know, maybe you want to buy small businesses, or maybe you want to be a sales guy, you want to do tech sales, from, because obviously this is very broad, from the perspective of ease, not ease, but you know, ability to kind of do your own thing,
Hmm?
some sort of entrepreneurial aspect, have your own business, whatever. Would you say that it's easier to do that in real estate than, let's say, the investing world?
No, I think they all have their own separate challenges. Um, for me, and this is just for me. For me, I like the entrepreneurial aspect, and it could have been with anything.
Okay.
Could have been a plumber, could have been a carpenter, could have owned my own car dealership, could have been a landscaper. It didn't really matter. For me, I preferred the entrepreneurial side of things because I preferred to be successful based on my own work ethic and my own ability, and my abilities were also helped by other people. It's not my own, like my not my own God-given ability. It's more of just what can other people bring to that. But I didn't want to. I could never. For me, I was never a 9 to 5 guy because I didn't want to do something where there wasn't a reward at the end for working harder.
Right, exactly.
So I needed to be compensated, whether for whatever it was. If you're the best plumber, you're making more money than the other plumber because you're the best. If you're the best carpenter, or if you go then open up your own, you become the best carpenter, and then you start hiring people up underneath you. Well, now you have a business. Same thing for this. It was I wanted to be the best at what I did, and then there's things that come from that. The things that come from that are sometimes monetary, but it's also just personal satisfaction. Again, we go back to the idea that you can make all the money in the world and still be unhappy. So for me, what drives me as far as my happiness, it's not monetary. Like I love the mentoring aspect. I love the creativity. I love the challenge of it. I wouldn't do Project Destined if all I was concerned about was money. I wouldn't be doing this if all I was concerned with it was money. So
Right.
there's just there's there's a reward to it that goes beyond just the monetary thing, where it goes back again to just enjoying yourself and loving what you do. Like I enjoy speaking with people and helping them however I can, whether it's
Yeah.
mentorship, talking through things, etc.
Yeah. Within the real estate world, earlier I asked you, how do you become an owner, entrepreneur, investor, whatever within real estate? And you want to identify where you're going and then also gain experience at a firm, or not even a firm, just under someone who is doing that and is
Hmm.
where you want to be. I guess my question is, I don't have any experience working in real estate. So let's
Hmm.
say I were to get maybe an internship. I don't know. I haven't decided on an internship this summer yet.
Are you a
With
sophomore or
I'm
junior?
a junior, so
Okay.
junior year internship. So I'm looking at different things. But let's say I continue my interest in real estate and I want to do something related to that in whatever domain I decide.
Hmm.
How do I? Because I imagine not every firm, not every program is gonna one match up with, obviously on a general level. Like let's say I have a specific asset class or whatever, but even from the perspective of being a good learning place or having that ability to work
Hmm.
under someone who is where I want to be. So I guess my question is, how do you assess different opportunities within real estate? Like, how do you know if
Sure.
it's one that aligns with your end goal?
So let's give a hypothetical scenario.
Yeah.
Okay. So tell me, do you want to own stuff that is existing, or do you want to own stuff that you build? And I'm not
I'm
holding
not
you to
sure.
it.
I'm not sure. So
Okay. So well, do you is it so? Let's just go with that. You want to own. Okay.
yeah,
And let's say you want to own. You don't want to own super high end. You want to own working class. Okay, garden style apartments,
right.
150 units, etc.
Yeah.
Where do you live?
like back home, like right now I'm in Ithaca. I'm from Amherst, Mass. It's
Okay.
Western Mass, like UMass, Amherst College, same town.
Where do you want to do your internship?
I'm looking at New York just because I was there last summer. I liked it a lot, and it's kind of
Mhm.
the certainly for finance, it's where everything
Yeah.
is. Real estate out maybe slight less so, although it's still kind of the hub. So I'm looking there. I'm open to going to other places, but I think it has to be a city of some sort.
Okay. So go figure out a couple. If you go and you find an apartment building somewhere, even around Ithaca, there's got to be a dozen, 2 dozen apartment buildings that
Yeah,
fit something that if I said today, Will, you could own this in 10 years. Is this something you would want to own?
right,
Go and find out where that property is. Go and find out who the owner is. Go ask him for a job.
right.
And if he just says no, what do you do?
Do it again.
Go to the next one.
Right.
Go to the next one. Because they have what you want. Go figure out how they did it.
Yeah,
And is it, do you go with a big firm? Maybe in the beginning. Maybe a big firm is going to be, why would I go with a big firm in the beginning? I would go with a big firm in the beginning because the tools that they have are probably better than they're more sophisticated than the smaller firm. But finding out who the owner is easy.
yeah,
Go call Cedric and say, hey, can you give me a list of all the groups that you work with who own multi-family properties that are 50 to 150 units? I'll give you a
right.
list. And so Will, coming out of Cornell, is not going to have a hard time getting an internship at one of these places.
Yeah,
So Will goes in, gives them personality, tells them what he wants to do in the future, sells that company on Will with the reason to hire Will, and go and work and learn.
right.
Figure out what you liked about it and what you didn't like about it and how you're going to change it and how you're going to do it. Marcus and Mill job was great. There's things I didn't like. Switched to Colliers because I wanted to get something different. Colliers had things I didn't like. I switched. Does everybody switch? Not really. You don't have to. You may wind up being at a place that you love and you stay there. Walker and Dunlop, great company. Saw more opportunity for me at Northmarq because I saw a disconnect in what Northmarq was doing, and then so a disconnect creates an arbitrage. That arbitrage gave me opportunity.
Yeah. I think I so I agree with everything you said. I think one thing, this is just me kind of talking about, I kind of know that at this point when you're young, the single most important thing is assuming it's something that you want to be doing is learning, right? So that's what you want to solve for. You want to maximize learning and ability to see how something works, understand it, etc. So I know that to be the case, but still I don't know, when I apply to certain things or I evaluate certain opportunities, I still am considering, like, how much are they going to pay me? Is this a big name? Things like that. Even the specific thing, the specific internship, and but also okay, 2 years down the line, and it's like in the end, it doesn't. Whatever the difference is, let's say 10 years from now, it doesn't. It's not going to make a difference. What's really going to matter is whether I learned enough to put me on a path that made sense for me. Because if that's the case, then you're just going to have outsized results as opposed to forcing something else in. But I don't know. It's something I have to remind myself of
Well,
because
so think about it, right? Like,
yeah,
you are reading a book by the cover.
right,
You can go work for a major firm and get lost in the shuffle.
yeah,
You can go work for a mid market, and the guy takes you under his wing, gives you a job, and starts giving you pieces of the business.
right,
You work for a mid market, and the guy doesn't have the time of day for you.
Right.
work for a big firm and get great skills. You get a great name on the resume. I don't know, man. Like but until you get in, you have no idea. Like
Yeah.
it's two different firms, two different types. And you can have two completely different experiences. You could also have. I mean, we've had people who have come to work for us who worked for Walker and Dunlop, the company, but didn't work in a good group that they liked. So it's well, I wish I could give you the magic bullet, but it really
Yeah, I
is.
know. These are all questions. I'm like, oh, tell me the
But
answer. And it's like,
they're great. They're
yeah,
great questions. I mean, listen,
right,
man, these are great questions, but it's a lot of it's trial and error.
right. Yeah,
And
I
there's
think, yeah,
there's no perfect,
right,
but you try to get as close to it as you can.
right.
Like there's going to be things about Northmark that we probably won't like. Nothing so far, but eventually there'll be things that we would like to see done differently. So be a catalyst to make change. It's tough when you're young. I mean, for you it'll be a challenge. Um, be a sponge. Like go in and if you go work for a company, like if you go in 9 to 5 and you just grab your stuff and you roll out every day and that's all you
Yeah,
do,
it's right.
then you're wasting your time.
Yeah,
Like great, you made a check. Who cares?
right.
Go like even if you're not getting paid as much, but they have a ton of resources and you can borrow those resources to expand your knowledge going forward. That's what I would do.
So I guess that's like, how do you know which ones are going to have more resources or more learning opportunities?
You don't
No indicators.
now, but yes, I mean, you could always go at like, so if I were considering places, um, which I think that you will have a bunch of places to consider, so if you wanted to go to work for our team, who would you call to find out about our team?
About
Our team.
your team. You.
Yeah, like let's say you said, hey, you know what? One of the places I want to go work in Philadelphia, and I want to go work for John Banas and Chris Wood. Who would you call to find out about our team?
Call people within the team, and then if I
Yeah,
could, people who've worked with the team. Yeah.
100%. So if you call up your peers, or they should give you an answer.
Right.
I mean, we do it all
Yeah.
the time. Like where and the one thing, man, like you really just need to be careful as far as don't get discouraged by it. Don't timing is everything. My stepson works for JLL. He got turned down multiple times before he got the job. Multiple times because it was just timing. It wasn't that they didn't want to give him a job. He just didn't have an opening. For us, when we hired the three guys who we hired, we had 350 resumes. They didn't even look. HR didn't even look at the last 250. So it's about timing and it's about persistence and it's about be continuing to ask for what you want. It's about setting yourself apart. Go do send your resume in, but make sure that somebody's actually looking at it.
Right.
So I got 3 minutes left. I got to jump at
Yeah.
8:15. So
Yeah.
um, what else?
That was those were the main things. Like, okay, how do I think about this as a possible thing to pursue? I guess the last thing would be if I still have the interest and I want to learn more, what should I be thinking about? Like, what should I learn about, or what should I look into besides obviously programs like Project Destin, getting some financial modeling
Yeah, yeah, yeah.
skills, like follow the markets, read the news every day, like
Well,
which
so there's do you know who Peter Linneman is?
I maybe heard the name, but it
Did I lose you?
says you're reconnecting. I can hear you though.
I lost you.
Looks like it.
Hey, are you back? There you go. I lost you for a second. Can you hear me? Will, can you hear me? Can you hear me?
Hello.
Yeah, I can hear
There
you.
we go.
Can you hear me?
Yeah.
Okay, good. So I'll shoot you an email.
Yeah.
Peter Linneman is an economist who has a real estate certification course. Peter's an economist and he's also a professor at Penn. So he has a real estate certification course. It's rock star, man.
Very good.
Yeah, yeah. It's like real life stuff. It's like a 6 month thing. It's discounted as you're a student. I would highly recommend that. I would start looking into CCIM.
Okay.
CCIM is a good helper, and also um, you can network well through it. And I would try. Cedric is a great resource, man. Like
Yeah.
Cedric knows everybody. If you look and you look at who is involved with Project Destin, it's every major firm in the country.
Right. Yeah. It's a lot.
Like every
Right.
so instead of just going through the program, become friends with Cedric and ask him the same kind of questions you're asking me.
Yeah.
He'll talk to you. He might not at first, just because I know he's got a lot on his plate. But
Right.
if you keep on, if you're persistent and you give him a reason to, he'll help you. He's
Yeah.
a good dude.
Yeah. Appreciate it. I don't want to take too much of your time, but you're very helpful. It was great speaking with you. Answered a lot of questions, and yeah, we'll speak via email for sure. Appreciate it. You too. See you.